Today I want to explain exactly how Mintos works, step by step in plain language. If you are new to investing, or if you've heard about peer-to-peer lending but never really understood how it works, this video will give you a clear and honest overview so you can decide if Mintos is right for you. Mintos is a peer-to-peer lending platform. That means you are not buying stocks or crypto. Instead, you are lending your money to real loans and earning interest when borrowers pay those loans back. Mintos acts as the marketplace in between. They connect investors like you with loan originators that issue loans to people and businesses in different countries. The first step is simple. You create an account on Mintos and deposit money. Once your money is in your account, you can start investing it into loans. You can do this manually by selecting individual loans yourself, or automatically by using Mintos Auto Invest feature. Most beginners use Auto Invest because it saves time and spreads risk more evenly. One important question everyone asks is how much money you need to start. Technically, you can start with a very small amount, sometimes as low as 10 or 50 euros. But realistically, if you want this to make sense as an investment, a better starting point is around 5,000 euros. With 5,000 euros, you can diversify across many different loans and reduce the impact if one loan performs badly. With 20,000 euros, diversification becomes even stronger and your returns tend to be more stable. Now let's talk about returns, because that's why most people are interested. Mintos does not guarantee profits, but historically many investors have earned between 8 and 12% per year. A realistic long-term average to work with is around 9% annually, assuming you reinvest your interest and stay diversified. Let's look at what that actually means in numbers. If you invest 5,000 euros and earn around 9% per year, after 1 year you would have roughly 5,450 euros. After 5 years with compound interest, that could grow to around 7,700 euros. After 10 years, you would be close to 13,000 euros. And after 20 years, that same 5,000 euros could grow to more than 44,000 euros if returns stay consistent. Now let's scale that up. If you start with 20,000 euros, after 1 year at 9%, you would have about 21,800 euros. After 5 years, around 30,800 euros. After 10 years, roughly 52,000 euros. And after 20 years, you could be looking at around 176,000 euros. Again, these are examples, not promises, but they show the power of compounding over time. Next, it's important to understand how long Mintos has been around. Mintos was founded in 2015 and has been operating for around 10 years. In the world of peer-to-peer lending, that is relatively long. Over the years, Mintos has gone through good periods and difficult periods, including economic downturns, which gives investors some insight into how the platform performs under stress. Now we need to talk honestly about risks, because this is not a risk-free investment. First, Mintos is not a bank. Your investment is not protected by a government deposit guarantee. If borrowers fail to repay their loans, or if loan originators get into financial trouble, you can lose money. Second, many loans on Mintos come with a buyback guarantee. This means that if a borrower is late by a certain number of days, the loan originator promises to buy the loan back and return your principal plus interest. However, this guarantee is only as strong as the loan originator itself. If the originator cannot pay, the guarantee may fail. Third, liquidity can be a risk. While Mintos offers a secondary market where you can sell loans, there is no guarantee that you can exit instantly, especially during market stress. Because of these risks, diversification is critical. Spread your money across many loans, different countries, and different loan originators. Avoid chasing only the highest interest rates. Often, slightly lower returns with better diversification lead to better long-term results. So, who is Mintos suitable for? Mintos can make sense for investors who already understand basic investing principles, who want higher potential returns than savings accounts, and who are willing to accept higher risk in exchange for that return. It should not be your only investment. Think of it as one part of a broader portfolio. To summarize, Mintos allows you to earn interest by lending money through a peer-to-peer platform. You can start small, but larger amounts like 5,000 or 20,000 euros work better. Returns can be attractive, but risks are real, and diversification is essential. If this video helped you understand how Mintos works, consider subscribing for more clear and honest investing guides. My goal is to help you make smarter financial decisions, one step at a time.